It's time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold.
So ScreenPro Security Inc, SCRN on the CSE, currently trading at a price of only 2 cents. It is a nano cap, I would say, and it has a market cap of about $8.3 million. So ScreenPro Security is a screening and medical technology company that provides turnkey COVID-19 screening solutions with its alerting software, GoStop. The company has access to multiple manufacturers of high-quality test kits and partnerships with labs in Vancouver and Ontario, which allow the company to be a nationwide provider of full-service testing solutions across Canada. Since listing, the company's shares have been in quite a bit of a slide, down from around 15 cents to just 2 cents, where they are trading today. Looking at the recent financial results for Q3 of 2021, the company does have revenue, which is great. They had 3.9 million compared to no revenue for the same quarter last year. They are making a profit with net income of 724,000 compared to a loss of about 38,000 for Q3 of 2020. Adjusted EBITDA was about 812,000 compared to a loss of 32,000 last year. And the balance sheet does have about 150,000 in cash with no debt. And so in the company's investor presentation, they did provide some pro forma projections for 2022, 2023, and 2024, where in 2022, they're projecting to do about 4.5 million in net income. 2023, they're projecting to do about 8 million in net income. And then 2024, they're projecting to do about 11 million. Now, if these projections can be achieved, I certainly believe the company could offer value in its current range. But whether these targets are achievable, and I would argue that they, especially if when we're going out to 2022 or 2023 and 2024, that they're not, especially when we're potentially coming out of a pandemic and into an endemic. So our take here, personally, I think it's a very interesting business that is breaking into profitability, has a good balance sheet, and is trading with low valuation multiples. But the forward thesis here does have some question marks around it as to whether COVID-19 testing will continue to offer growth opportunities going forward, especially if one thinks that we are on the way out of the pandemic. And this is realistically the primary risk here. The market is always looking forward, and with the possibility that COVID testing will start to decline in the mid to near future, the low valuation multiples may be an indication that the market anticipates growth in earnings to begin to wane, and thus those lower multiples justified. Now, I am skeptical on whether the company can achieve their pro forma revenue and earnings guidance provided in their investor presentation, like I said before, but if achieved, the stock could possibly offer value. However, the bottom line here is that this is a high-risk play for individuals who believe COVID-19 testing will offer the company significant room for growth, which in my opinion is pretty difficult to predict going forward. There's question marks in the air. It's definitely, a spec play, but it's an interesting business. They actually have profitability, which is good.